A very good afternoon, everyone. Welcome to uLaw CPD webinar. Thank you for joining with us today. On behalf of my team, extremely sorry for the 15-minute delay. We had the reminder email set up on the draft. However, we missed to send it out this morning. A small human error. Apologize once again. But thank you for joining in pretty quick. And I will be sharing the attendance link as well as the topic information towards the end of the session to save more time for all of us. I will also be looking into the chat window for any questions towards the end of the webinar. The webinar will be running from 2:15 EST to 3:15 EST. As you all know, the topic again for today's session is disbursements demystified. We do have a small agenda that we follow for disbursements demystified. I will walk you all through whatever we are discussing under this webinar today using our platform as well towards the end. Quickly to go through the agenda, we are going to be looking into basically what are disbursements and how do we manage them. What are the different types of disbursements and how do you benefit from using trust account instead of general or credit card? What are the benefits out of using this trust directly to render any disbursements or to expend any disbursements? Types of general disbursements. There are various types of general disbursements, unlike in the trust. We're also going to see how the general disbursements are addressed in terms of billing, in terms of collecting more or less, which is markup or markdown. We're going to be seeing different scenarios here as to what happens when you outsource the work, which is third-party consultancy. What happens when you are recovering expenses for travel, mileage, how do you bill them? And especially for printing and photocopies and courier, how do you charge billable? How do you charge unit rate, etc.? So as you can see here on the agenda, using trust is definitely much simpler, even though accounting for trust is always a little, I won't say trouble, but it's always more careful to watch because you are using your client's money to make the payment. So, but at the same time, when you're using general for a disbursement, recovering it from your client becomes a huge bookkeeping process. There are a few steps to cover here, and we're going to be seeing that. We're also going to be seeing what are law society's expectations when it comes to disbursements, basically. What do they expect from you? Do they expect you to save the bills? Do they expect you to keep a track of the transaction IDs, the amount, whether you're marking up to your client or marking down, whether you use your personal account or your general account? How do you plan to transfer the money? How do you plan to get the money from your client? Do you have a trust account? Are you getting the money from trust to the general? Or you're going to directly bill your client and get the money into the general? We're going to see few different scenarios. And also how these are implemented in your day-to-day business. So that way, you can all go back and start practicing this and make sure that, disbursement is just another line item in your invoice, and it is no big thing, right? Because I feel sometimes I have come across a couple of scenarios where people would actually club the disbursements with their legal fee because they don't want to go through the hassle of showing disbursement as a disbursement and recovering it and other things. So they would just say in the description saying legal fee plus disbursements is total. But then end of the day, it is about the accounting. You are going to show your client the exact breakup of this is what you are charging as a legal fee. So you collect taxes if you are collecting HST, GST, PST, respectively. You collect taxes, you pay to the government. Likewise, for the disbursement, why I always say it is important to add disbursement is that you've already expended for it on behalf of your client. So you have paid taxes to the government on whether HST, PST, GST, respectively, if it is taxes applicable item. And when you collect it from the client, you're passing on the taxes to them as well. So you're charging taxes and you're paying taxes to the government, both at the same time. So it's important to record a disbursement as a disbursement, because when you record it as a legal fee, which I have come across a couple of scenarios like I already mentioned, you are only recording in your books of accounts as if you're collecting taxes for that disbursement, because obviously you add a legal fee and the disbursement, and then you charge taxes on it. You're collecting taxes, but there is nowhere that you've recorded in the books that you have rendered it to the government, which happens only when you expend it, which is when you record the disbursement. So even before I get into what is disbursement and all of those, one of the main reasons that I would like all of you to note down or make some notes or implement this process in your business or in your practice, that it is important to record proper transactions into your books. So that way you end up calculating proper HST, GST, PST to pay to the government. It's not like you're always on the inflated income HST side and then taxes side rather, and because obviously you have not recorded the expenses or your disbursements, which includes taxes that you have already paid to the government. So for the ones who do not record disbursement religiously, please, I request you to pay attention to the webinar for the next few minutes and benefit from it. And, beyond whatever this webinar could do, you could always reach out to us on support@uLawPractice.com for any questions. All right, so let's get into what is a disbursement in layman's terms. I really love this. It is just expense incurred for your client on behalf of them by your law office. You are not personally expending on behalf of them. It is that your law office is expending on behalf of your client, which will eventually be reimbursed by them. That's one of the reasons why it is called disbursement. Disbursing the expense, which will eventually be reimbursed by them. So I think that's probably why it's named as disbursement. So to keep in mind, it is just an act of paying out money to any expense. Could be printing charges, could be filing fee, anything on behalf of your client, and eventually either you collect it from them into your general account by invoicing, or by, if you have, your trust has money, you directly disperse it from trust, or you again invoice and move the money from trust to the general. One of the main things here is to maintain proper books. When I mean proper books, I mean right from the time, the date, the amount, the description as to what it was spent for, with taxes or without taxes, whether there's a markup value or markdown value, and what was the method of payment you used, whether you used a credit card or a business general account or your personal account, or any other account that you have used, or cash. How did you make the payment? And last but not the least, the transaction number. Many times we do not pay attention to the transaction numbers because those things matter very small. But trust me, when you are going through an audit or when you are yourself doing an internal check, these transactional numbers come very handy for you to verify the transaction with your bank, especially while you're reconciling. You see the transaction number against the item or you see the email transfer ID, or whatever you come across, you scan the receipts, you keep it on your cloud. Let's say you're being audited, you can always open the file of receipts and show it to the auditor and say, hey, you know what, see, this is the transaction that I've recorded under this particular client matter. Here's the transaction number. Here's the receipt. Please match it. You don't even have to say the completion of the transaction in your books of accounts will speak. Hence, if you are someone who likes to do the data entry yourself, or you have a bookkeeper, you don't have the time for it, please make sure that you record all these disbursements as to how it was paid, when it was paid, what was the reason, and for which obviously the legal practice management software today helps with all of this. Things have become very simplified. I might sound complicated to you all right now, but trust me, when you're in uLaw or in your practice management system respectively that you're using, when you go into that particular client and matter and type saying disbursement or recorded disbursement or add a new disbursement, we give you the options. You only have to select. You only have to literally click the button or prompt saying, hey, it's a printing, PRI, and then it will say, okay, printing paper, photocopies, blah, blah, blah. So you have a list to select from, put that in, and then put in the other numbers, how it was paid, when it was paid, select the date, etc., etc., etc. We make things simplified for you. Within less than a minute, you are out of the disbursement section as it is. You just have to invoice, pay yourself, move on. So 2-in-1, you get to show your client what you've done, so they know everything is transparent. At the same time, you also get paid. Actually, I would say 3-in-1. At the same time, you're also ready for a law society audit. I always tell my clients that you should be law society audit ready, or just let's say audit ready any time in the day. That should be the level of bookkeeping, or I would say making sure you have recorded every single data into your books of accounts. So anyway, coming back to it, this is something that is done from the client and the respective matter level. One client could have several matters, but make sure you're entering this disbursement into the respective matter only. And once paid from the general account, things get, I would say, not complicated, maybe a couple of steps additional in comparison to what happened in your trust. So when you pay out of your general account, what happens is that you get to first decide whether you are paying a lesser amount and you're charging your client a higher amount, which is called as markup. Basically, you pay $15 and you collect $20 from your client, which is markup. Also, you decide whether you're going to send this invoice to the client as just a disbursement, or you want to add a legal fee and send it to them. So it becomes a wholesome invoice. And no one likes to see multiple invoices. They get confused, right? So I always recommend my client, if you have a disbursement, punch it in. If you have a legal fee, punch it in. Send them all together. It looks nicer, but I understand that sometimes you will have disbursement initially, then your legal fee comes once the work is done, vice versa, right? So just make sure that you record them appropriately, decide which portion is going to be invoiced, whether the higher portion, lower portion, and pre-bill it. Ensure you've taken a look at it, and then pay, and then you get paid, whether it's into the general account or it's into the trust, and then you transfer from trust to the general. There can be only two ways that you get paid for it. But what happens further when you paid it from the general? General means it is your business general account. It is also your credit card, your office credit card or business credit card. It could be your personal credit card. It could be cash. General includes various accounts. So make sure that you get paid in turn if you've used your personal. So by transferring money from general to the personal account, bank transfer. So those are few steps when you are using the general account. Now, what if I can use trust? Why not directly pay from trust? Why the hassle of doing it from the general? One thing for sure, for people who don't have a trust account, they have no option. They're paying only from general business credit card or your own pocket, which is your own credit card or, your own personal account or cash, etc. But for the ones, especially who have trust account, exhaust that opportunity first, I would say. And because obviously, number one, you've got the money in the trust account. So you don't want to put in your money and get it blocked into the business. You rather use your client's money. But there are some do's and don'ts when you are paying out of trust. Number one, very simple, no markup value when you're paying out of trust. Why? Because it's not your money, it's your client's money. You cannot charge them more. You can only charge them the exact amount that you're paying for the particular expense, that disbursement that you're incurring. And also when paid from trust account, one of the important things is you don't have to bother about recovering because, it could always be a little pain. Recovering an expense is not easy. Recovering anything from your client sometimes could be difficult. It could be delayed. It could be questioned. It's a little tricky, right? So, if you have an option, why not? Especially if it's not something you're not going to mark up. If you're going to charge them for the exact amount, you might as well, put that to use, or rather utilize that feature. Another one is that you just show the expense from the trust, you invoice the client, and you move the money from trust to the general. There is no such thing of invoicing the client, waiting for them to pay into the general account, right? Or then you move the money from general to your personal, etc. Basically, disbursing out of trust or using your trust account for the purpose of disbursement is only going to reduce your bookkeeping requirement. Clear? Because, things are direct from the trust. You record, you invoice, you move money from trust to the general, make it yours. As simple as that. So paying out of trust, I am always for it unless and until you follow these simple things like no marking up and no photocopies, such kind of things. So we are going to see in the next slide, next couple of slides, what are the types of disbursements that you could do from trust and general. Actually, we could quickly see that right now, and we will review it again later. So when can you use trust? Straightforward. When you're not marking up or something, and when you're using for filing fee, code fee, etc., billables and consultancies only on actuals, they are trust. So if you see here in the box, you wouldn't see anywhere that says only trust. You can see only general, and you can see both trust and general. There is nowhere only trust because it is not mandatory for you to use only trust. Not everybody would have a trust account. That is what is kept in mind, and there is no such thing that says you can use only trust for a disbursement. It is good if you use trust for certain disbursements, like actuals, billables, and the expenses that are again on actuals. Consultancy on actual, expenses recovered on actuals, billable on actuals. Both trust can be used. And when are you recommended to use only general? If there is a markup, if there is a filing fee that has markup, especially if there is travel time, billable, unit rate, any consultancy that is on profit margin, again, that is not on actuals, that has a little profit or marked up value, then only general account. All right. So this is, if you want to take a screenshot, you're welcome. But this is something, I would call it like a mantra. I would always say, if there is any profit margin involved, you cannot use trust account to disperse client's money. The client will decide what they can pay. So always use general account for any profit, any marked up value, unit rate, travel time. These are all not actuals considerably, because you could say a travel time is 40 minutes while it only took you 30 minutes. So, there's no proof, or it's not standardized, if I could put it that way. So please note down, this is more like a template that you could follow, and everything will fall into this later on. So if you go and now see, for example, when can you use your general and credit card and owner's pocket? Now we saw when we could use trust. So when you're paying from general, there could be a slightest of chances that you decide to do, or rather more chances that you decide to do a markup on profit. So record the expense appropriately with the date, with the amount, with taxes, without taxes, the method of payment, who it is being posted to, the client matter, and whether this disbursements paid from the bank, from the credit card, out of your personal pocket, or by anybody else, reimburse them appropriately. Once all of this is done, then you can raise an invoice, pay yourself, and you can go from there. So it is simple again. You're doing from general. It's just that you need to make a note of all of those, things like date, amount, before taxes, after taxes, whether it's tax exempt, and other things. The next one here talks about ledgers that need to report disbursement. During audits, you have basically some requirements to pull out the disbursements from both the ledgers, both trust and general, and review it. Every transaction basically is dispersed either from trust or general, but needs to be recorded under the disbursement ledgers. Based on these types of transactions, which is maintained under the trust or general, you will be able to understand, whether what type of disbursement it is. And these ledgers will typically have a date, particulars, receipts, disbursements, what was the money that came in, what was the money that went out, belongs to each and every client and their respective accounts. Over here that you see is a little sample. As you can see, both trust and the general ledger. I'd like for you all to take a look. Extremely sorry, I went on mute. I didn't realize. All right, so quickly taking a look at what are disbursement journals against disbursement ledgers. So journals, as you all know, are more detailed activity. It's a single type of activity where more details are shown. Under a journal, you would see only a single type of activity being recorded, either a disbursement or a receipt, which will obviously not have a running balance, but will have an amount. So the sample here shows you the method of payments, the purpose of payment, and who it was paid to, and amount, date, etc. If it is a receipt, it will show source of funds or who it was received from, and the rest all remains the same. Mostly the disbursements will have a HST paid and total paid, etc. So that it's easier for you to calculate what was not just HST, what was the taxes paid overall. Now, how does disbursements and fee book look? So let's say now you have a fee book that records all the fees and the disbursements, obviously because disbursements forms part of clients' invoices, which is also in turn recorded in the fee book. Now, fee book records all the invoice numbers, which client was billed, and associated taxes that were collected for the fee and disbursements, etc. Following samples from the Law Society here shows you that there's a date, invoice, client, fee, billed, disbursements, if anything billed, will show in that column, taxes, and total billed. Obviously now, if you're using a practice management software, all of this is auto-populated because you're only required to record the activities or the transactions into books of accounts, and the rest are automated. Now, as I already mentioned, these are some benefits of using legal accounting software. So basically, you can record the events as and when they happen. You also get to maintain compliances. You can also record all of the transactions. And finally, you get to see the ease of use, accountability, and most important of all is for your own internal audit, and you can use it for analytical purposes too. All right. Now, benefits of managing disbursements is also a part of Disbursements De-Mystified. Now, one of the important things that I always feel that we miss out if we don't follow these under disbursements is that we could easily not record or invoice for the disbursement that was paid by you. Raise an invoice. This could be a simple courier fee. This could be a simple printing charges. It could be $20, but nobody is going to go back to your client to fetch the $20 and by invoicing and going through the process again. So it is extremely important for you to basically add in all the information at the same time. And there is always a risk of paying for disbursements via general than ledger, than the trust, because over here you can see that when you're using your general, it is your money that you're using. And if you forget to invoice, or if for some reason, if you don't record the proper amount, you're at loss. So the risk is high when you're paying disbursements via general. So make sure that you record the event then and there. And any profit margin or marked up value needs to be managed properly and ensure that it is in compliance, that you don't use the trust account for any such marked up component, and there's ease of use analytics, and it's all about compliances. Quickly switching to uLaw so that I can show you all how disbursements works, how the document generation and the disbursements work. But in the meantime, I'm going to take a quick pause to see if you all have any questions. If you all have any questions, now is a good time for you to enter it in the chat window so that I can take a look at it and show you all while I'm, showcasing uLaw. All right, quickly switching tabs. This is my uLawPractice account, and let's just look into disbursements, okay? I think I'm gonna take a new file, okay? That way we all know how it looks with today's date and everything. Just gonna do a basic record. Email ID. The typo. God. Save it. So once you're done with this, the first thing that you'll want to do is obviously go create the matter. Now to create the matter, you click on matter, you open the matter. So let's say over here it is traffic ticket, or just want to say maybe a divorce thing. Family law, there's also file number from the court. There's a file number of your own, or you want to say child custody or something included. And then you have your hourly rate, everything, save it. And once this is done, the first thing you're going to do here is simply say legal fee. You're going to add, let's say, a flat rate. Then you save it. obviously there are more things here that I'm not showing under disbursements demystified, like a description, record into it, use the AI tools, make your own summary, do all of this, and obviously then you save it and raise the invoice after adding such comments. But right now I want to skip this part and go to disbursements. For disbursements, again, keep in mind that there's a first level of bifurcation, whether you're doing it from the trust or from the general. So one thing I always recommend my clients here is to follow your bank. At the bank, what exactly happened? Okay, you used your trust account to make the payment? Great. Just make sure the client has money in it. You cannot just like that use the trust account. It is not probably from this client that the money is there in the trust. It could be some other client. So always go into your uLaw account and make sure the trust here has the money. If the trust here doesn't have the money, which means either you have not recorded here or either the client has not paid at all. So just make sure that you've got your basics right. So in that case, then you're putting in some money here. Let's say the client paid you a little retainer. Okay, so you have the retainer in. You also give client a receipt. All of these are small things, but you just saw within 10 seconds, I was able to say, put in the function, the date, the amount, the method of payment. You know, when we saw all of this as part of presentation, it looked too big, right? With 5 points in each slide, and all of those was a little complicated, or rather at least sounded complicated to us. But when you do it, it's pretty simple. The date, just punch it in. The amount, punch it in. So tell us your method of payment, the reference number, you know, including who it was received from, blah, blah, and apply. So once it is done, okay, you can download this for your internal purposes. Okay, that's the receipt part. Let's go back in there. Now let's get into the actual disbursement. So you decided to do a small disbursement from your trust account because you have the money in the trust, and why not? Which doesn't include the markup value. So you're going to do it right from there. So add new disbursement, withdraw from trust directly. Okay, so you're accessing it. It was $200 for check. Great. So you have the check number, description, maybe filing fee. Who was it paid to? Courthouse. Which courthouse, etc. can be said, the whatever needs to be said. Okay, now you can also download the check. Everything done in 1 second, literally. So once all of those done, you just go back in there. Then you want to add more disbursements. This time you know it's a marked up value. So you're going to use your general. So there's a second level of bifurcation is under general, you have to choose what it is for. Okay, so whether it is a billable under general cash other accounts, then you can use this option. If it is for actuals or mileages or any units, you can use the second one under general. If it is for any miscellaneous expense, you can use the third one, which doesn't take it under any particular, it doesn't take it under any particular print. So that is one of the other things. So you can just click on, and then if it's third-party consultancy, again, if it has the marked up value and etc., you can do that. Prepayment to disbursements mainly for any law office that has any prepayments and from the deposit account if you're rendering the disbursement. So now let's say I want to do the first level. This is for the translator fee, or let's say this is for some title search fee. All of this can be done under here because you want to show a little marked up value. So in this case, I'm going to say just printing or courier. I am charging the client $25 plus taxes, whereas I got billed only 15 plus taxes. Okay. Best part is you can say paid to Canada Post. There are places where you can just say how it was paid, used your credit card, your official credit card. You have the transaction number, goes on from there. Now the next one here, I'd like to show you all the actuals. Let's say this was an actual thing. So using general, actual billable is very rare, right? So you could say maybe you used Disbursements software charges. About $120 plus taxes. There is no bottom portion, if you all could see here, because there is no markup concept under actuals. It is the actual amount that you're using. In fact, you could have used trust account for this 120 as well. Okay. Then you can quickly save. Obviously, you need to add the details as it is check number, etc. Okay. Now let's say you want to add in new disbursement and actuals, mileages. Again, this time I'm going to use unit. So let's say this is again printing, and this time you actually went to Staples, so you're doing the actual printing, and you printed 20 at $1, and then taxes, and then you used your credit card, your office credit card, put a punched in. So the difference between the previous one and this one is this is used only for actuals, mileages, units, but they're actually spent. But at the same time, let's say I use this one, miscellaneous for printing, and then over here, I used my office printer. So let's say I'm charging my client $20 again, plus taxes, but this time I'm not entering even $1 here because I used my office printer. So I would be adding my office paper and ink only under, only under my office expenses, not over here. Okay, so once you do that, this is a complete marked up profit. Okay, save it. Now, let's say you go and click on add new disbursement. This time I'm using it for third-party consultancy. I'm going to use a translator, and I want to show it as if, I paid the client. I paid the translator and I also charged the client. Again, there's a little marked up value, so we can use this, and we can pay the client directly. Maybe I put it under professional help. Then say check, no email transferred, reference number, and you save it. Once all of this is done, you want to proceed. You want to go ahead and charge the client. Okay, so you're going to invoice. This time you're going to complete the invoice for both dockets and disbursements. Okay, and then you can go in there. Done. Okay, so now let's go here and check how it looks. Your legal fee comes here. And then you have your disbursements here. You have the courier fee that was charged at $25 plus taxes. And then the divorcement charges. And then the printing charges. There's another printing charges. We're going to see the difference between both of this. One was done from the miscellaneous expense. The other one was done from actuals. So we're going to see how everything looks here, okay? Let me go back. Let's go into accounts. Let's go into compliances, monthly compliances. We're going to take a look at the client's trust ledger. Let's put in just today's date because I think I worked only on this today. I am also going to download client's general ledger. Let's download everything and then take a look together. And then I'm also going to download the general disbursement. It's a very nice journal. So we're going to download the receipt journal. So remember there are 2 ledgers and 4 journals. So ledger showing both type of activity and journal shows single type of activity. Okay, so I've got all the 6 documents. Starting off with client's trust ledger, there was $500 that we received as a retainer. which is shown as a receipt with a method of payment and particulars, balance and trust, running balance. Okay. And then we also have the disbursement directly from there. And the next one here is the client's general ledger. Shows you all of those that you have billed your client, expended from general to. General means general cash, credit card, all of it. So it clearly shows the particulars, date, amount with taxes, without taxes. Then we also have the next one here is the journal, which shows a single type of activity. If it is a disbursement journal, shows you what was disbursed, how it was disbursed from the journal. You have Disbursements, Canada Post, and Translator. So this was directly done from the general account. Now, if I take out the trust, it tells the trust ledger if you had expended anything from the trust. So over here, there was 200 that I directly expended from the trust. Because there is no markup, I decided to use the trust money, and hence you have it in here. So here are some of the examples which comes with the check number and the description. These are helpful. The best part is the method of payment with the payment number. Going back, you would also see if there are anything that needs to be paid to yourself. Now, accounts receivable is there, but the payment's not into your general account yet. That is because you need to first make the transfer of the money that is lying in your trust that has been billed. So make this yours by transferring the money from trust to the general. And of course, I add in all the reference numbers, transfer it. Once that's done, you would see that the receipt journal from the client would have, the payment journals would be there. Under the general ledger as well, you would see the receipts in. And then now, let's say you go back into the matter, the client also makes the client payment into the general account. The best part about the software, it doesn't allow you to add in extra money. So the way you're still under compliance, not even going to override any restrictions unless you deliberately go into it. You can also give another receipt, skipping that part. Go back in there and let's say I want to download another client's general receipt. And you will see all of those. Okay, let's go back in there. Take a quick look for the money that you have received just by email transfer. This $300 moved from trust to the general receipt trust transfer. So the general receipt journal previously was empty. Right now the general receipt journal is with funds that came into the general account. So this was, I think, previously zero because you did not receive any money for the accounts receivable. Then later now when we made the transfer and got the remaining into the general account, your journal shows the exact amount. So here you go with all the details when you are completing it. It's nice to see a completed document versus an incomplete, the way you have everything in, less than no time. Quickly recapping, we do have the disbursements demystified here. That's the topic for today's session. It is a CPD for 1 hour of professional and CPD credits. I will be sharing the link shortly. We discussed about what are disbursements, what are different types of disbursements, when you could disperse from the trust, when not to disperse from trust. Please keep in mind with anything marked up value, never touch trust, never do it from trust, do it from general. So anything of actuals, always try to do it from trust if your trust has money and if you have trust account of this. And we also discussed about how do you go about recording these transactions, and also, how do you plan paying from general to your own self, right? And we also have discussed about how to recover, how to pay yourself, how to generate ledgers, when not to use general, which we discussed. Of course, there's nothing like when not to use general, when not to use trust is what is there. And we also discussed as to what are the different types of ledgers, journals, and fee books and invoices and other reports that would show all the amounts that has come in and gone out. All right, so far this is what we could do in the 1 hour. I hope everyone really enjoyed the disbursements demystified. Once again, extremely sorry for the delay in starts of 2:15. I thank each and every one for joining in spite of the delay, and I'm glad we could finish it on time as well. I am going to share the attendance link and the topic for today's session and a few other important links for you all to take a look at. For the ones who have any questions, I request you to either stay back to connect with me, or you could send me an email on the email ID I'm posting at the bottom. Thank you all very much for joining in. Here's the attendance link with the topic details and other useful links for you to take a look at. Please do not leave without giving us the attendance. So if you have anything in future, we could always, help you saying that you had attended this session with us. Thank you all. If there are no questions, I am assuming either the session was fabulous and you all understood. I will take it as a positive. If you all have any questions, like I said, I'm still here. I'm going to be here for another 5 to 10 minutes. Feel free to ask me any questions regarding this topic or, anything else on the bookkeeping or accounting for legal practice management. I am happy to answer any of your questions. And for more queries or to book a call with us, use support@uLawPractice.com. I'm also sharing with you all our book a call link. So if you have any questions from today's topic, or if you need any help, you could always use this link to book a call with us, and one of our representatives will be with you to walk you through your questions. Thank you so much, everyone, once again for joining in today's session. I hope everyone enjoyed. Have a wonderful weekend. Until next week, we are going to discuss, it's a non-CPD topic, so please do show up, show your support. It's very important for me to talk to more people, have more people listen to me. It's really encouraging to see more people come in. The topic for next week is uLaw business reporting. We are going to walk you through different reports that will help you to internally build more analytics, and we're going to see quite a few things. I know it's not a CPD. We are going to try and get more CPD guys, but in the meantime, we want you to come in and show your support and encouragement, like I already said. So please do join us at 2 p.m. next Friday, September the 27th, for uLaw business reporting. Thank you all, and have a wonderful weekend.